Throughout all my years of trading, I have tested hundreds of different strategies, and the one that is actually proven to work, it's simple and reliable, is opening range strategy. But we are not going to just wait for a breakout entry where actually traders get trapped and stopped out. We are actually going to use something much smarter, so let's actually get into it. Before we actually get into it, I just want to show you the results this strategy actually got me last month. So you can see I have about 85% win rate, which is usually few percentage to the downside, so about 82-83%. So you can see I had only one loss the whole month, and you can see the total of month is just under $30,000. So this is the result you can expect one day with this strategy. And of course, as trading scalable to infinity, it can be whatever numbers you actually want, but these are the statistics that I managed to get the last month. Alright, so let's first start with why to use this strategy. So the point of this strategy is to actually trade for the first 60 or 90 minutes a day. It's usually going to be a really small amount of time, which is about 60 minutes a day. So that is perfect because you don't want to sit on the charts 9 to 5 the charts and be on the charts the whole day. Then the second important thing is this strategy makes sense. So when I explain it to you, you are going to be able to understand the strategy because it's completely logical and based on volume and momentum. So you are going to see everything, but it's going to make sense in your head, which is the first thing that you want in trading, because you actually want to understand what you are going to do on the chart. And the third thing is it's simple to use and only rule based. So everything you do is going to be based on rules, and it's going to be very simple to use and to actually execute on the charts. So when we come to the chart, so this is going to be the first step. This is a 9:30 open right here, so we can trade whatever market open we want and whatever currency, index instrument, whatever you want. But the point I want to say is that you want to choose one session timing and one currency, or one indice or crypto or whatever. So you want to just trade one session and one pair. And let's say if you want to trade the New York session, we are going to come at the open at 9:30 Eastern time, which is a New York session open. You can do the same for the London at a different hours. So when we come to the market open, we want to wait for the first 5-minute candle to form. So from 9:30 to 9:35 we want to wait. So we want to wait to get a candle formation. So this on the screen right here is the 1-minute chart, but what we are going to do and what I'm going to actually show you on the chart later on is how to just mark out 5-minute high, 5-minute low, and on the 1-minute time frame it's going to look something like this, where we are going to have a simple range. What we then have is a breakout towards the one side. Now what we are not going to actually do is look for the market to target to the upside, because if the market does not actually show us later on that we want to go to the upside, we are not going to long the market, but we are always going to look after the one breakout of one side. We are going to look for the reversal and the target of the second side. So that is going to be the point. We are going to wait for the sweep of one side and then targeting the next side. But there is also a way that we are going to target the same side if the market actually shows us that it wants to do that. So I just want to make sure that you understand how all the opening range traders are actually going to think. So they are going to think if we break the 5-minute high, they are just going to scream buy, and they are going to enter the market long positions. Same as to the downside, if we break out towards the downside, they are going to want to short the market, because that's the only logical thing. Is the market is breaking out to the upside like this, we want to continue that trend, and the same for the downside. If it's breaking to the downside, we want to continue going to the downside. But that's actually not the case, because market is always going to manipulate people out, and in this case is going to manipulate orb traders. So what we don't want to do is just blindly sell after the market dumps below this range, or buy if it just pumps, because what's going to happen is it's going to sweep one side and very likely go to another side. So what we are actually going to do is most of the times we are going to wait for the sweep of one side and then target another side with a specific entry model that if we present it, the win rate is just going to be abnormal, because it's based on very logical confluence. So what we do is we wait for the sweep of one side and then we target another with an entry model. Or the second thing, if the market actually shows us that it does not want to go to the downside, which is, as you can see right here, we have the opening range right here, these red lines, and you can see that the market just broke above. We didn't get the entry towards the downside, we swept the low that we created, and we got another entry to the upside. So this is going to be more rare, but I'm going to show you exactly on the chart later on how you can exactly find this, spot this, so you can also profit if the market does not want to reverse towards the downside. So we have two possible outcomes. So right now, this right here is the winning formula. So if you follow these three things, there is nothing that is going to stop you in the market. So always wait for a strong displacement for the confirmation. So this is mostly going to be used for the entry part. Let the market show you the direction, so you don't want to force anything long short the market if it doesn't actually show you that it wants to do that, and enter only after entry model is presented. So the entry model that I show you right now is the only way you can ever enter the market, because if you enter the market without the entry model, that is not following the strategy, and your results are not going to be good as they should. So this is the second example that can happen in the market. So we have a opening range right here. So this is a 5-minute candle right here in 1 minute, and then what we also have is a retracement and then break of that 5-minute candle range. So you can see right here we broke to the upside, but then we didn't get the entry model. So what is actually the entry model? So let's look at the entry model at this picture right here, because this is a perfect long that we are going to use. So after the market went to the upside, then back to the downside after sweeping the top of the orb range, and we didn't get the entry model. You are going to understand why in 2 minutes. We swept this low down here, and then we got the entry exactly right here. How did we get it? So as you can see, we have something specific right here. So we actually do have a fair value gap, which is an imbalance in the market. So when we went to the downside, we left this square right here. It's not a square, but it's a imbalance in the market, which we call a fair value gap. And what we want to do is we want to mark it out, and when the market actually sweeps a low like this one right here, and we want to see a continuation, not a reversal all the way down here, what we do is we wait for the closure above this fair value gap. When we get a closure, market is officially not wanting to go to the downside, because if we did want to go sweep this low, we would respect out of this fair value gap and go to the downside. But since we didn't respect it and we just closed above it, what we do is we enter the market on the closure and we target to the upside. So this liquidity or some sort of liquidity to the upside. Okay, so here we are at the actual live market. So what we can see right now is, if we look at the timestamp, we can see that it is 9:25 right now. So this candle opened at 9:25 and closed at 9:30. So what is exactly about to happen right now is market open. So what we want to do is we want to let the first 5-minute candle actually play out. So what we do is, if we skip forward the market one candle, you can see this is our range. So what we do is we mark out high and then we mark out the lows. So this is our official range that we are going to either wait for the sweep of one side targeting another side, or we are going to wait for a sweep of one side to then a no entry given, and then a sweep of the low or the high that we created, and then a continuation move like this. So it's either that scenario or just a scenario of sweep and then targeting downside. So let's actually right now go to the 1-minute chart. So right here, 1-minute chart, and let's see what is exactly going to happen in the market. So if I fast forward the market, you can see that we actually came to the downside and we swept the downside right here. So what exactly do we want to see right now? We want to see a fair value gap getting formed in the market. So right here, we need to see a fair value gap, which we don't see right now. So also you can see right here, this is a fair value gap. So we are looking for something like this with a hole in the market. So if I fast forward the market, let's see. So we finally actually got the fair value gap right here. So I'm going to mark out this fair value gap. So if we potentially close above this fair value gap, I can actually long the market. And there it actually is. So we have the closure above this fair value gap. So we also had another fair value gap down here, but we closed both of them. So for example, if we closed our candlestick like this, we would still be able to enter the market because we actually didn't tap into this fair value gap. So as long as we inverse the fair value gap that we retested or tapped into, then we are good to enter. So if for example we closed like this in the market, but we have a wick that actually tapped into the next fair value gap, we also want to see a close of the next fair value gap for us to actually enter the position to the upside like this. So what we are going to do right now is we are actually entering the market. So we are entering the market right here. We put our stop loss below these fair value gaps, and what we do is we target to the upside. So not the biggest risk to reward, but with the win rate this model offers, this is absolutely huge. And you can see within 2 minutes we are already hitting the TP. So 1.5 risk to reward is on the 1% risk on the $100,000 funded account. This is $1,500. So it's just a beautiful reward for the amount of time. So this was exactly 50 minutes after the market opened. So today we would have traded for 50 minutes and just go off the charts earning $1,500 on just one account, and you can actually have loads of them. Alright, so here we are at the actual second market open. So you can see right now it is the candle that opened at 9:25 and closed at 9:30. So the next candle is going to actually show us the range that we are going to be trading. So this example, there is going to be something different from the first one. So it's going to be that second way of this model presenting. So this is the range that we have. So what we do is on the open we mark it out like this, and that's it. What we do then is we go to the 1 minute chart, and what we do is we just wait for the sweep of one side to then know what to actually do. So let's actually fast forward the market to see what it's gonna do. So if I fast forward it, you can see that it's staying in the same place, and now we actually pumped. And what we did is we swept to the upside. So you can see we have successfully swept the top of the range. So what we actually want to see is, of course, a fair value gap getting formed that we can inverse to the downside. So let's see if that is actually going to happen. So market is going to the upside a little bit more. So still no fair value gaps right here, but let's see what actually happened. So right now what I can see is that we created a new low. So we have a new low down here. So the second way of this strategy actually presenting is if we sweep the one side and then we just continue going that direction, actually make a pullback and a sweep of it, and then we get an entry model, which I showed you was the fair value gap that gets disrespected. That is the only way right now that we can actually get the setup. So let's see what will actually happen in the market. So if I fast forward it, you can see that we finally got the sweep of this low and we left a fair value gap. So right now we still have to wait to see if this fair value gap is actually going to get disrespected. So right now we just retested it and rejected from it, so still no entry. But right here we actually got the entry. So what we do is we enter the market, we put our stop loss underneath the fair value gap or underneath the body of the candle, and what we can do is we can target, for example, this high. But since it's a negative risk to reward, what I want to do is I want to target some kind of bigger target, which is, for example, this one right here. And let's see how is that actually going to play out. Will it win or will it actually lose? So let's see, 2 risk to reward, which is abnormal once again. So it's $2,000 on one risk on a $100,000 funded account, and you can see we are over by 9:57. So this time we traded for 27 minutes and this trade lasted for about 5 minutes, as you can see, and that's just absolutely huge. Alright, so that is basically my strategy and the way I trade. I hope you liked the video. If you did, make sure to leave a like and subscribe. That just makes me know that I'm doing something right. Also, if you maybe are interested in working one-on-one with me personally, make sure to go down there in the link in the description. It's going to be the first one. Check out if there is still some spots left, because I do not accept a lot of people into the actual one-on-one mentorship. So maybe you actually get mentored by me if you act early and try to book a call. So one more thing, if you maybe want to claim this strategy's playbook, it's also down there. It's a link in the description, so make sure to go down there and claim it for completely free. So with all of that being said, I'm just gonna see you in the next video. Peace.